Good morning, afternoon, or evening, ladies and gentlemen, all in crypto here, and welcome back, guys, for another daily cryptocurrency market update. If you are new around here, every single day at 1 p.m., we release a daily crypto market update where we don't just look at the cryptocurrency market from a charting point of view and a kind of news flow point of view, but we also look further afield at kind of what's going on the economic landscape and how that may affect our market. We look at things like stocks, gold, even things like bonds, monetary policy, and we try and sort of correlate it all together with our market. There's lots of moving parts to a market, any market, and we try and sort of simplify all that and piece it together in these daily videos. So that's what we're going to be doing in this one. We have a hell of a lot to cover. Even though the price action for Bitcoin has very much been in a range or kind of a flag-like structure that we'll look at, there's been a lot of news that's came out. And yesterday, where we're really going to start is looking at Jerome Powell's comments from yesterday. The Fed did a 25 basis points, so 0.25% hike, taking the Fed fund rate to 5.5%. I think this is the highest federal fund rate in 22 years, something along the lines of that. And of course, we know some of the issues that it's causing. We've often speculated at what point does, the Fed's quite hypocritical. We've seen balance sheets, we've seen debt actually rise, which have been a tool of QT, despite them continuing to claim quantitative tightening. So there's a lot of nuances involved with quantitative tightening and quantitative easing. And we've also said at what point does quantitative tightening become quantitative easing. So we are going to look at that. We'll be looking at Jerome Powell's comments. And then we've got some really interesting things to go over. We had a bill, a non-partisan bill, the Blockchain Regulatory Clarity Act, actually go through Congress yesterday. We'll listen to a little bit of the opening statement. And then we had the likes of Brad Sherman push back on this and talk about actually, the fact that the United States is the only people that print money and have the right to print money, not the crypto bros. And then he talks about how, the beneficiaries of the United States printing money are the citizens in the form of tax cuts and other such things, which is a nightmare. Undoubtedly, some people do benefit from the printing of money and the issuing of, for things like, welfare and stuff like that. But one thing I always ask the question of, looking at things objectively, is at what cost does that come? And I think that comes to the cost of many. And then we're going to be looking at a number of other interesting things. Yesterday the Fed kind of said we're not forecasting a recession. And actually we were very much in the recessionary camp. We were in the kind of 2008 camp really in 2022. And we pivoted at the start of the year, got back into the markets, which was nothing short of a spectacular call. And we continue to get validated in regards to what we're looking at. So before we dive into the Bitcoin chart, and I also have an idea, specific technical analysis videos seems to be very popular for Bitcoin and altcoins. We may do one of those early in the morning every day as kind of part of the routine, then a daily market update, and then a kind of interesting video in the evening for me. But that's something to come perhaps next week. We've got lots of podcasts coming out next week as well with interesting guests. Let's start actually with Jerome Powell's opening statement yesterday. And the markets have really quite appreciated this, even though he's done a hike. And you've got this kind of discrepancy between monetary policy, perhaps, and the markets. The markets did well on actually what is supposed to be a tightening financial condition that they've applied to the economy. It's kind of like when you get good earnings for stocks like Microsoft and it sells off. Markets are forward-looking. This is why we don't trade fundamentals. We don't trade news. We think the people that do that get wrecked. There's lots of evidence to suggest that. We trade the charts, and the charts suggest one thing, that perhaps the fundamentals, certainly over the past 7 months, which the bears have been largely listening to, the fundamentals don't add up with what the market's doing. And if you would listen to the fundamentals, you'd have missed a lot of the move that we've seen. Stocks, some of them have gone up to new all-time highs within the space of 7 months. And people still calling for a bear market. So let's listen to Jerome Powell's opening statement, and then we'll move on swiftly with what we've got to come.
Good afternoon. My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. We understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy doesn't work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Since early last year, the FOMC has significantly tightened the stance of monetary policy. Today, we took another step by raising our policy interest rate a quarter percentage point, and we are continuing to reduce our securities holdings at a brisk pace. We've covered a lot of ground, and the full effects of our tightening have yet to be felt. Looking ahead, we will continue to take a data-dependent approach in determining the extent of additional policy firming that may be appropriate. I'll have more to say about monetary policy after briefly reviewing economic developments.
So very interesting. Just to pause there, in the last meeting, he said that we see another 2 hikes impending. Another 2, pretty much all committee members see another 2 hikes impending. So there may still be another one. We're going to have to watch this, but he hasn't instantly come out hawkish here. He said it's going to be data dependent, and certainly we've seen that lower inflation. We've seen a number of other things, all pointing towards this.
Recent indicators suggest that economic activity has been expanding at a moderate pace. Growth in consumer spending appears to have slowed from earlier in the year. Although activity in the housing sector has picked up somewhat, it remains well below levels of a year ago, largely reflecting higher mortgage rates. And higher interest rates and slower output growth also appear to be weighing on business fixed investment. The labor market remains very tight. Over the past 3 months, job gains averaged 244,000 jobs per month, a pace below that seen earlier in the year, but still a strong pace. The unemployment rate remains low at 3.6%. There are some continuing signs that supply and demand in the labor market are coming into better balance. The labor force participation rate has moved up since last year, particularly for individuals aged 25 to 54 years. Nominal wage growth has shown some signs of easing, and job vacancies have declined so far this year.
Very interesting and counterintuitive to a lot of what the headlines have been saying. Again, follow the charts, not the news flow.
While the jobs to workers gap has narrowed, labor demand still substantially exceeds the supply of available workers. Inflation remains well above our longer run goal of 2%.
I mean, it's at 3, but okay.
Over the 12 months ending in May, total PCE prices rose 3.8%. Excluding the volatile food and energy categories, core PCE prices rose 4.6%. In June, the 12-month change in the Consumer Price Index, or CPI, came in at 3.0%, and the change in the core CPI was 4.8%. Inflation has moderated somewhat since the middle of last year. Nonetheless, the process of getting inflation back down to 2% has a long way to go. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher cost of essentials like food, housing, and transportation. We're highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning to inflation to our 2%.
We'll leave it there. Quite a lot to unpack there, but basically it's a lot of what he's already reiterated. The market's reaction to me was important. If we drop down to a daily time frame, it quite enjoyed actually what Jerome Powell, I wouldn't say enjoyed it, but it was almost like a sigh of relief. I think 25 basis points was so expected. I've never seen the Fed Watch tool at nearly 100%. We have said when you've got this kind of sideways, we assess that this is a bull flag. We assess this was part of the right shoulder of the head and shoulders. We think this is sort of similar, 30K level, very, very significant. You're just kind of drifting off it. It's not as brutal. If this was going to be the level where the market capitulated from and the bull trap still got people calling for, I mean, and I also get a lot of comments saying, what bull market? Okay, so since we got back into the markets, Bitcoin is up 77% and was actually up 91% at some point. I think people have got this idea that the markets have just gone flat. Whereas, again, going back to the stock market, which the futures market seems pretty positive, Microsoft, new all-time highs. They sold off on good news. Perfectly our head and shoulders target was hit there. Apple, going on to new all-time highs. We can go on and on and on. Gold actually looks like it wants to move. Bull flag. We've got everything in our favor here. And the dollar back at that 100 mark. Isn't that? I mean, look at this. What we spoke about in yesterday's video. But back to Bitcoin before I put everyone to sleep. We don't want that. It's very, very common when you're in this, and this is why we might do these daily technical updates on Bitcoin, just to give people a sort of anchorage of what it looks like. It's very common that when you're at a key level that you have a kind of a flush out to the downside before you then take it, and this could be it. And actually, the market's quite enjoyed everything that happened yesterday. And people say, "What do you mean? It was quantitative tightening." Well, look at what the market's reaction was. Got a futures market today, which is looking to open relatively strong. Gold up, FTSE up, and of course the dollar down. Lots of altcoins making moves. You guys want to find out? I believe that we are very well positioned as a group to do exceptionally well, and as a channel, as a result of a lot of what we're saying. So 30k will get taken. We've got targets up in the 40k range, which takes you back into this nice little bit of consolidation. Really where the lunar crash took place. 30k getting taken, actually, I think is going to be rather fast, the move to the 40k zone, because you haven't got a great deal of volume in this period here. In fact, it's one of the lowest periods of volume, and you've not got that kind of price action there to chop around in. So we're getting macro context right. We're getting technical analysis contents right, and we're even getting fundamental analysis right, which is fundamental is almost the last thing that we trade off of. And again, you've got the halvening coming up. You've got loads of things coming up. It's going to be an interesting time ahead, but we assess it's going to be a bullish time ahead. And certainly we've got lots of things showing the way. Yesterday, you had a non-partisan bill introduced and just passed out of the financial CMT, so the financial service operations. This is a huge win for the United States and one step closer.
Mr. Emmer is now recognized for 5 minutes.
Thank you, Chairman McHenry. I'm proud to have this
was a
nonpartisan
bill that essentially has been introduced. We're seeing a lot more friendliness. I never thought I'd see the day perhaps when we'd see crypto get represented in Congress in the manner that it did. I want to move on to, and we'll try and wrap this video up because we've gone on for quite a while now. Just before we go on to Ben Sherman's comments, or Brad Sherman's comments. Ben Sherman. This is now the US consensus GDP forecast, which is rising similarly with the markets. If you look at when the market, certainly Bitcoin started rising, it was in a similar position. This, of course, again, is the US recession odds. And this is starting to downtick. And the Fed staff no longer forecast a recession this year. Very interesting, very different from what the news headlines. This is the problem. So I agree with the bears that a shitstorm is coming. It just doesn't come yet. The yield curve inverting. We did a video yesterday on the Great Reset and my thoughts on how I think it plays out and how we end up with a one world currency and a new monetary system. Please go and give that video a watch, guys. Puts a smile on my face talking about it, because I think I've actually probably got this quite right in regards to actually the bond market, and its undoing is what ushers in everything. In the same way that we went off a gold standard because of the kind of realization that they didn't have the gold to back the dollars and everyone would have collapsed. Same thing will probably happen with gold. The emperor will realize he's naked eventually. But let's in regards to the bears, I'll finish off on that statement. They've been following the headlines, right? And they've been following certain metrics which do look ugly, but not accounting for the other ones that actually contradict and add nuance to the entire situation. It's kind of like when everyone started screaming about, oh, the debt ceiling's now being raised, remember what happened last time, and not taking into context the fact that what happened last time was a reverse repo issue that didn't have a lot of money in, and they drained it and then it clogged up, whereas today you had they've been draining it rapidly since it upped, 2-point-something trillion at the point of them raising it. So we see the wood through the trees on this channel, and we're really dedicated in teaching people to fish. We're coming up with a load of courses that I genuinely believe that if you can look at charts in this method that we are coming up with that involves stage analysis, you will never get wrecked as a retail investor again, and you'll have a competitive advantage in a simple manner over your peers. Let's listen to Brad Sherman's comments. Very interesting what he has to say. Very contradictory and annoying.
The scent of Sam Bankman-Fried still wafts in the air here in the Rayburn building. The criminal in fuzzy hair and shorts had one objective: keep the SEC out of cryptocurrency. Today, the crypto billionaire bros have the same objective, though they are attired more conventionally. And make no mistake, all the money, power, PACs, and lobbying is on their side, for they have made nearly $2 trillion they make money by literally making money. In contrast, there are no PACs and lobbyists in favor of effective tax enforcement, or preserving the ability to enforce our sanctions laws, or providing to the American families the thousands of dollars of benefit they get every year, each and every one, from the fact that the U.S. plays such a critical role as a reserve currency. Yes, it is true the United States also makes money by printing money. That benefit goes to the American people when we provide more services or when we tax them less.
Bullshit. Okay, I'm sorry, but the thing is, what governments are very, very good at doing, and I've got to say this, right, is they're good at playing on people's heartstring, and they're good at benefiting the few at the expense of the many. Okay, so undoubtedly when they print money and they give it to certain sectors, it benefits them. But at what cost does it benefit the rest of the people who suffer at the hands of that money printing and inflation of their money supply that they work very hard for? Now, I'm all for helping people, but I'm all for doing it in a way that doesn't penalise everybody for the sake of a few. And he also mentions lower taxes. When was the last time you had lower taxes? In fact, I live in the UK, essentially giving up nearly 50% of my wages, or my earnings, I should say. I don't think that's a fair deal. And actually, there's no incentive for me to stay in the UK, other than it's somewhere I'm familiar with and family and whatnot here. But something we'll talk about and look at in the future. So very interesting what Brad Sherman had to say there. He slags crypto off, but then says the US government does the same thing. And actually, you do have some bad actors like Sam Bankman-Fried and many others out there. But it's like saying that Bitcoin's used for illicit activity, when the US dollar is the chosen choice of illicit activity. But it's not just that, it's a small fraction of, actually, very small and minute fraction, almost irrelevant fraction of actually everything, all the transactions of Bitcoin. Just to finish things off on a little bit of more cheery, positive and happy news. This is a growing industry to include all contractual value in the larger goal. So you've got DeFi here at 89 billion. You've got cryptocurrency at 1.2 trillion. You've got gold at 10 trillion. And each one of these represents 100 billion. You've got the stock market at 89.5 trillion. You've got global real estate at 280 trillion. You've got derivatives at 1 quadrillion. You've got insurance, you've got global trade, you've got global advertising, you've got gaming, and hundreds more industries that you can add to this. There's 1.2 trillion in the entire crypto industry. It's going to get to the tens, and actually is going to be responsible, in my opinion, for the facilitating of transacting and moving and storing and all sorts of things, the value of hundreds of trillions. So, on that note, I'm going to love and leave you. I think the markets have reacted quite well to everything that Jerome Powell had to say. Really, the only thing left for me to do is wish you all a fantastic Thursday, and ask for a like and a comment. And if you want to subscribe to the channel because you see value in this content, please do so. And watch out for our daily market updates every single day at 1 p.m. UK time. And let me know what your thoughts are on a technical analysis specific video where we just solely focus on the charts. A quick one every morning on Bitcoin, crypto, what I'm seeing, and then we can get on with the rest of the day. All I've got for you guys. Have a fantastic Thursday. See you in the next one.